Bull Bear Buzz podcast for decoding markets, fueling minds.
Welcome to the Deep Dive. Today, we're really digging into the Indian stock market's moves on Wednesday, April 30th, 2025. We've pulled together a whole bunch of reports, market summaries, specific company news, the lot. Our mission, to figure out what really drove the market that day, why it happened, and maybe what it could mean for you. The headline story was that the Sensex and Nifty 50 didn't really go anywhere, ended up flat. But that doesn't quite tell the whole story, does it?
No, absolutely not. It was definitely a day of mixed signals. We saw some pretty big moves in individual stocks, and then there were these, significant geopolitical things bubbling up too. So yeah, flat on the surface, but you really need to look underneath to get the real picture.
Okay, let's do that. Let's start with some of those big movers. The Bajaj twins, Bajaj Finance, Bajaj Finserv, they both took a noticeable hit, down about 5-6%. What was behind that?
Well, the main trigger seems to have been profit booking. Right after they released their March quarter earnings results, it's pretty common, actually. People reassess after earnings. And if the results or maybe the outlook aren't quite what they hoped for, they might just decide to, lock in some profits.
Okay. And for Bajaj Finance specifically, I heard that even though their bottom line profit went up, some brokerages were flagging a couple of concerns. What were they looking at?
Yeah, that's the interesting part. The final number looked okay, but digging deeper, some analysts pointed to weaker pre-provision profit. That's like the profit before they set money aside for potential bad loans.
Okay.
And they also noted higher credit costs. So it kind of suggests that maybe while overall profit is up, the underlying quality or the cost of achieving it is a bit concerning for the future, maybe anticipating more defaults.
Right. So it's about the quality of those earnings and what it might signal going forward. And speaking of going forward, Bajaj Finance also tweaked their growth forecasts for this year. Sounded like they were maybe tapping the brakes a little.
Exactly. They revised their guidance for assets under management, their AUM, down around 24-25%. That was definitely lower than before. And their expected return on equity, ROE, also adjusted down to 19-20%. So this more cautious tone likely fed into that negative reaction in the market. Some analysts actually shifted to a neutral rating, basically saying, at this price, maybe the revised growth doesn't look quite as attractive anymore.
But it wasn't all negative for Bajaj Finance shareholders, was it? They announced some other things, too.
That's true. They did declare a dividend, 56 per share in total, which includes a special dividend.
Well,
and maybe more significantly for the share structure, a 4-for-1 bonus issue. So 4 extra shares for everyone held.
Wow, okay.
A 1-for-2 stock split. Each share becomes 2. Just keep in mind the record dates for those will be different.
So even with the price dip, existing investors get more shares and a dividend. Now, what about from a trading perspective? Did the reports give any technical insights, levels to watch?
Yeah, technically speaking, it looks like that recent upward run for both stocks might be, sputtering a bit. For Bajaj Finance, reports mentioned 8,718 as a key level. If it breaks below that, could see more downside, maybe towards 8,450 or even 8,050.
Okay.
Resistance was seen around 8,955 and then maybe 9,200. For Bajaj Finserv, the focus was on its super trend line support. A close below 1,938 could signal a trend change. Support around 1,913, resistance near 1,988.
So traders were definitely watching those specific numbers closely.
Definitely. Key levels to gauge the next move.
Okay, let's shift gears completely. A much bigger picture issue that was definitely weighing on sentiment, those rising tensions between India and Pakistan. How did that play out in the market?
Yeah, rising geopolitical tensions, they almost always make investors jittery. And these reports certainly did. You had the news about PM Modi giving the military chiefs more freedom to respond after the Kashmir attack.
Right.
And then Pakistan claiming they had intelligence about potential Indian action. It just creates a lot of uncertainty.
Yeah. And that leads to cautious trading.
Absolutely. People tend to pull back, maybe wait and see, especially with a market holiday coming up on Thursday. Traders likely didn't want to hold large positions over the break, given the situation.
Makes sense. Did anyone offer a view on the longer-term financial impact beyond the immediate nervousness?
Vinod Nair from Geopolitics Investments had an interesting take. He acknowledged the short-term negativity, obviously, but he pointed out that historically the actual long-term financial hit from conflicts like this has often been, limited.
Interesting.
He even suggested that any market dip caused by this could actually be a buying opportunity for investors with a longer horizon.
A good reminder that short-term noise doesn't always mean long-term disaster. Now, while the main indices, the Sensex and Nifty, were flat, you mentioned the broader market wasn't quite the same. Mid-caps, small-caps.
It's a really key point. The BSE mid-cap index fell 0.70%, and the small-cap index dropped quite a bit more, 1.74%.
Ouch.
Yeah, much steeper falls than the main indices. It points towards a broader kind of risk-off sentiment taking hold. When things get uncertain, investors often shift money away from smaller, maybe perceived as riskier, companies towards the big, stable names.
And that selling pressure adds up.
It certainly did. Across the board in mid and small caps, it led to a pretty substantial loss in overall market value, something like 4 lakh crore wiped off market cap that day.
And within the market, looking at sectors, it wasn't uniform either, was it? Some did well, others struggled.
Exactly. A clear divergence. Realty, pharma, and auto sectors actually showed some strength. Nifty Realty was up nearly 2%, which is quite strong.
Okay.
But on the flip side, PSU banks, media, energy, the broader banking space, they faced selling. Nifty PSU Bank Index dropped over 2.2%.
So definitely not a case of everything moving together. Specific industry factors were at play.
For sure.
We also saw that contrast between stocks hitting new highs and new lows on the same day. What does that kind of signal?
Well, having 60 stocks hit 52-week highs while 33 hit 52-week lows on a flat day really highlights the underlying churn, doesn't it?
Yeah.
You've got companies like Party Hexacom, Mazagon Dock Shipbuilders doing really well. Hitting highs suggests specific positive stories there. But then you've got Sheila Foam, Geopolitics Industries hitting lows, reflecting their own challenges. It just reinforces that you can't judge the whole market just by the index. There's always stuff happening at the stock level.
Good point. So wrapping up the broad market view, what was the general feeling from analysts and what technical levels were they watching for the Nifty?
The overall near-term outlook seemed cautious. Analysts like Ajit Mishra at Religare Broking, Shrikant Chauhan at Kotak Securities were suggesting a stock-specific approach. Don't just bet on the whole market going up right now.
Pick your spots carefully.
Exactly. Technically, Rupak Dey from LKP Securities mentioned watching the 24,200 level as key support for the Nifty 50. And on the upside, resistance around 24,550. Those were the key goalposts traders were likely looking at.
Okay, helpful context. Let's pivot now to some specific company news. Indian Oil Corporation, IOC, they had a pretty impressive jump in quarterly profit.
Yes, quite significant. IOC reported a 152% jump in net profit for Q4 FY25 compared to the previous quarter. Very strong performance.
That must have pleased investors.
I imagine so. Plus, they also declared a final dividend of €3 per share, another positive tick for shareholders.
And Adani Power also had some updates, operational stuff.
Yeah, Adani Power reported higher power generation and sales volume for the full year FY25 and also for Q4. However, their profit after tax for the full year was actually lower than the year before. They mentioned things like lower recognition of some one-time revenues and higher taxes as reasons.
Okay, so mixed signals there. Now, shifting to something really important for all investors, that warning from Zerodha CEO Nitin Kamath about WhatsApp scams. This sounds serious.
Extremely serious, and unfortunately increasingly common. Nitin Kamath was highlighting these investment scams happening on WhatsApp. He laid out the typical pattern.
Yeah.
You get added to these groups. Maybe they look official, use familiar logos.
Right, they seem legit.
Exactly. Then they flood you with fake screenshots, testimonials, promises of huge, fast profits. The goal is to get you to deposit money into some fake trading app.
And then what happens?
When you try to withdraw, suddenly there are fees, taxes, charges, all bogus. And eventually, the scammers just vanish with your money.
Terrible.
Kamath made it crystal clear. Zerodha does not give stock tips. They don't run these kinds of groups on WhatsApp or Telegram. He urged everyone to be super cautious and noted these scams are particularly rising in places like Mumbai.
A really vital warning. Be careful where you get your advice. Okay, staying in finance, we saw the introduction of something called bond forward agreements. What are these and why do they matter?
Right, bond forwards. These are basically a new tool meant to add more liquidity, more trading activity to the government bond market. Unlike some other derivatives that just settle in cash, these give the holder the right to actually buy or sell a specific government bond at a set price in the future.
So actual delivery of the bond is possible.
Potentially, yes. And this seems particularly interesting for big players like insurance companies. Reports suggested they might want to convert a huge amount, maybe 3.5 trillion worth of their existing interest rate contracts into these new bond forwards.
Why would they do that?
It helps them manage their long-term interest rate risk better. Gives them more direct control over their bond holdings, which is really important for matching their long-term insurance liabilities.
Okay, interesting development in the debt market. We also saw a list of companies about to trade ex-dividend. Can you quickly remind us what ex-dividend means and maybe highlight a couple of names?
Sure. The ex-dividend date is simply the cutoff. If you buy the stock on or after that date, you don't get the upcoming dividend. You had to own it before that date. And yeah, several were going ex-dividend on Friday, May 2nd. ABB India had the highest payout mentioned, 33.50. Others included ACME Solar, Gujarat Intrux, KSB, Mold Tech Packaging, Forbes Precision Tools, also Tamla Platforms, and Vesuvius India. So investors focused on income would be watching these dates closely.
Good to know. Moving to renewables, Inox Green Energy Services made a move into a new area.
They did. They're entering the solar power operations and maintenance O&M business. They landed a big contract to handle O&M for 675 megawatts of solar projects across different states for a major renewable energy player. It's a strategic diversification for them into the growing solar O&M space.
Seems like a logical step. Now the IPO market Ather Energy's offering close. How did the subscription go and what's the general buzz around it?
The Ather IPO ended up subscribed 1.10 times overall, so just about covered. Interest varied, though. Employees were keenest, subscribing over 4 times. Retail was about 1.5 times. Institutions, 1.35 times. Non-institutional investors were less enthusiastic, only 0.35 times subscribed.
Okay. And the pricing gray market?
Price band was 304 to 321. Lot size 46 shares. The gray market was indicating a small premium, nothing huge. Brokerage views were mixed. Some said subscribe for listing gains, some for the long term. At least one said avoid due to valuation worries.
So, bit divided. Any key dates?
Tentative dates, allotment May 2nd, shares in demat accounts May 5th, and listing expected on May 6th. They plan to use the money for a new factory, paying debt, R&D, and general stuff.
Okay, thanks for that update. Let's talk about a global tech giant now, Apple. They seem to be really ramping up iPhone production in India. What's the driver?
Yeah, it's a significant strategic shift. Apple is pushing hard to make more iPhones in India. Part of it is definitely about diversifying away from China, reducing risk, especially with the ongoing U.S.-China trade tensions.
Makes sense.
They're working with partners like Tata Electronics, who are assembling older models, and Foxconn, whose huge new plant near Bengaluru is getting close to starting up. That one's expected to make large volumes, maybe even the upcoming iPhone 16.
Wow. Is India becoming a major hub then?
Increasingly so. Apparently, a large number of iPhones were shipped from India to the U.S. just in March. It shows India's growing role. The long-term goal mentioned is potentially making most iPhones sold in the U.S. in India by late 2026.
That's a big ambition. Okay, shifting focus again to personal wealth. Mukesh Ambani, back in the $100 billion club. What pushed him over the line?
It was largely that strong market rally we saw starting mid-March. You had foreign money coming in, maybe some easing trade tension vibes.
Right, lifting the overall market?
Exactly. And his key companies, Reliance Industries and Geo Financial Services, their stocks did particularly well during that period. That boosted his net worth significantly back over the $100 billion mark, though still below his absolute peak from last year, it's worth noting.
And what about Gautam Adani and other prominent Indian billionaires? Similar gains?
Gautam Adani also saw his net worth rise with the market tide, but yes, still quite a bit below his peak from 2024. Several others did very well, though. People like Dilip Shanghvi of Sun Pharma, Sunil Mittals of Bharti Airtel, their wealth got close to or even hit all-time highs.
Interesting.
Rakesh Andamani, Savitri Jindal, Lakshmi Mittal also saw big gains. But then you have others like maybe Pankaj Patel or KP Singh, whose wealth is still significantly down from their past peaks. So a varied picture, even among the ultra-wealthy.
Fascinating how these market waves affect fortunes differently. Now let's look at what mutual funds were doing. Domestic funds seemed quite interested in the pharma sector.
Yes, that was noticeable in the Q4 data. Domestic mutual funds increased their stakes quite significantly in a number of pharma and healthcare stocks. In 14 specific pharma companies, they upped their holdings by more than 10%. Names like Brooks Laboratories, OneSource Specialty were mentioned.
Why are they interested in pharma particularly?
Well, analysts suggest pharma is seen as relatively defensive, maybe less affected by potential trade issues like U.S. tariffs because demand for medicines is pretty steady, inelastic. Plus, valuations in the sector might look attractive, so funds seem to be seeing resilience and value there.
Okay. And finally, State Bank of India, SBI. Its stock dipped a bit, even though the general view seems positive. What caused the dip?
Yeah, SBI shares fell about 3%. It looked like profit booking, mainly triggered by the bank announcing plans to raise equity capital this financial year.
Potential dilution worries.
Exactly. Even though it's to fund growth, the prospect of issuing new shares can cause a short-term dip, especially after the stock had already run up quite a bit recently.
But the underlying view is still good.
Seems so. The board is meeting to discuss the plan. S&P reaffirmed their credit rating with a stable outlook.
Right.
And brokerages like Mary Asset Sharecan are still positive, maintaining a buy rating, pointing to SBI's strong balance sheet. So likely just a short-term reaction to that capital raise news.
All right, so let's try and wrap this up. Looking back at April 30th, 2025, it was a day where the main indices stayed flat but underneath. Well, quite a bit of action. We had profit-taking hitting big names like the Bajaj twins post-earnings, those geopolitical jitters adding caution.
Yeah, and that clear split between sectors. Realty and pharma doing well, while banks, especially PSUs, and the broader small-cap market felt the pressure.
Plus all those company-specific stories, IOC's strong profit, Apple's India push, the Ather IPO closing, billionaire wealth shifts. Lots of moving parts.
Definitely a complex day. And as you digest all this, it's really crucial we add our usual reminder.
Please do.
The information provided here is strictly for educational purposes. It is absolutely not financial advice. We are not SEBI-registered advisors. Investing in stocks involves risks, serious risks, including the potential loss of your capital. Always consult a qualified SEBI-registered financial advisor before making any investment decisions.
And we are not liable for any losses you might incur based on this discussion.
Exactly. For more unbiased market updates, please do subscribe to the Bull Bear Buzz podcast.